Hey everyone, welcome back to Finance Focus USA YouTube channel. Today, we're tackling one of the most debated questions in the investing world, which is the better investment, real estate or the stock market? Let's break it down with some pros and cons. First, let's talk about real estate. Real estate is a tangible asset, something you can see and manage. But let's dig into the details, starting with the advantages. Advantages of real estate. Point number 1. Steady income stream. If you rent out your property, you can earn a consistent rental income every month. This is great for long-term cash flow. Point number 2. Appreciation over time. Historically, real estate tends to increase in value. So not only do you get rental income, but the property itself could become worth more in the future. Point number 3. Inflation hedge. As inflation rises, so do property values and rents, meaning your investment keeps up with the economy. Point number 4. Tax benefits. There are various tax deductions like mortgage interest and depreciation, which can reduce your taxable income. Now, let's look at the disadvantages. Disadvantages of real estate. Point number 1. High upfront costs. Buying property requires a lot of capital upfront, down payments, closing costs, inspections. It's not cheap to get started. Point number 2. Ongoing maintenance and management. Once you own a property, you're responsible for maintenance, repairs, and potentially managing tenants, which can be time-consuming and costly. Point number 3. Liquidity issues. Real estate isn't easy to sell quickly. It can take months to sell a property if you need cash in a hurry. Point number 4. Market fluctuations. Property values don't always go up. The real estate market can fluctuate based on location, economy, and even interest rates. Now, let's flip to the stock market. Stocks represent ownership in a company, and while they don't offer the same kind of stability as real estate, they do have their own set of advantages. Advantages of the stock market. Point number 1. High growth potential. Historically, the stock market has delivered significant returns over the long run, often outperforming real estate. Point number 2. Liquidity. Stocks are easy to buy and sell. You can liquidate your assets quickly if you need cash, which makes stocks far more flexible than real estate. Point number 3. Diversification. With stocks, you can invest in a wide variety of sectors and companies, reducing your risk compared to putting all your money into one property. Point number 4. Lower entry costs. You can start investing in stocks with much smaller amounts of money than what's required for real estate. Let's move to the disadvantages. Disadvantages of the stock market. Point number 1. Volatility. The stock market can be highly unpredictable. Prices can fluctuate rapidly due to market conditions, economic factors, or even global events. Point number 2. Emotional investing. The volatility can lead to emotional decision-making, causing investors to sell low and buy high, which can hurt returns. Point number 3. No tangible asset. Unlike real estate, with stocks, you don't have a physical asset you can fall back on. Your investments exist on paper, and their value can change in an instant. Point number 4. Dividends versus income. While some stocks pay dividends, not all do, and the income might not be as steady or predictable as rental income from real estate. So, which is better? Real estate provides stability, a steady income stream, and potential tax advantages, but requires more upfront investment and ongoing management. Stocks, on the other hand, offer growth, liquidity, and the ability to start with less money, but come with higher risk and volatility. At the end of the day, the better investment depends on your personal financial goals, risk tolerance, and time horizon. Are you looking for something stable and tangible, or are you chasing higher returns with flexibility? Let me know in the comments, real estate or stock market? Which one do you prefer? Thanks for tuning into Finance Focus USA. Be sure to hit the like button, subscribe, and stay tuned for more great content to help you make smart financial decisions. See you next time.